Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is episode 140, Market Update with Brandon Reed. Okay, thank you all for tuning back in to another episode of Upticks. Before Brandon and I dive into what's going on in the stock market in the first quarter of 2021 and our look ahead, we hope all of you out there are staying safe and healthy during this horrible pandemic. So Brandon, welcome to the show. You're new to the show and you're new to Falcon Wealth Advisors. So I'm excited to have you on for your inaugural episode of Upticks. So why don't you tell the viewership or the listeners kind of a little bit of your background, if you don't mind.
Yeah, thanks for having me, Jake. I'm excited to be on the podcast and the video, and I'm excited to be at Falcon Wealth Advisors. My background has been in asset management for about 7 years now. I started with an RIA over in St. Louis, Missouri, where I was doing investment research, manager research, and bond trading, credit research as well. So I've got a large background in all forms of investment research. And then for the last 5 years, I've been an investment manager here in Kansas City, doing more traditional portfolio management and equity research. So from the start of my career till joining Falcon, I've been doing pretty much any kind of research you can imagine. And it's something that my background and my interest in the markets has lent itself to, and a big reason why I've joined Falcon.
Yeah, thank you, Brandon. We're excited to have you. And then you went to a couple different colleges, right? Where did you end up getting your degree from?
I got my degree from St. Louis University in finance. And it was actually at SLU that I built my passion and interest in investing. I helped manage the firm, or the SLU endowment fund, a portion of the endowment fund with some of my classmates. And that was real life portfolio management. The portfolio at that time was about $1 million, and we would do traditional equity research on names and then recommend them and present them to the class.
Nice.
And then we'd all collectively decide on what names should be in the portfolio. So it was very much real world experience. And from then on, and even, just that entire experience, I was hooked.
Isn't that crazy to you looking back that they gave college kids that much responsibility or access?
Yeah, looking back, I've certainly learned a lot. My 7+ years actually, in the professional world, I've learned a lot, and I've made mistakes and I've learned from them, and then just building knowledge. But that experience really gave you an appreciation for the power of what you have to do and the decisions you make. So I think it was a great learning experience right out the gate. And actually, they had you apply your background, what you were doing as internships and what you'd done through school thus far actually impacted your ability to get into the program. So it wasn't a class that anybody could take. There was, there was a process to apply and be selected.
Awesome. And you're also a chartered financial analyst. And you're the first chartered financial analyst, fully chartered teammate that we've had. So why don't you explain to our listeners what that really means and how hard that is to actually achieve?
Yeah, so I am a CFA. I've earned my charter, and what the CFA program is, it's a post-grad program. You can actually start it in your senior year of college, and it is 3 separate exams. And at the time that I took them, they were distributed one a year. So you could take one your first year. If you pass that one, you could take the second one and then the third one. And the CFA charter is very much for anybody interested in and looking to build a career on the asset management side of our business. There are real implications and applications for the charter and what we learn in the financial planning realm in terms of portfolio management, construction, helping clients understand market behavior and structure. So there's a lot of application to the content we study and learn. Now, the thing that some people might know about the CFA is that it's a lot of content. And when you're taking one exam a year and it's pass fail, so if you don't pass the first one or the second one, you got to wait another year and then take it again. So there's a lot of time and energy and focus that is spent passing those exams. I know my wife would say, she was my biggest support system through that. And when I was studying, for 4 hours a day after work, late at night, all these things. You put in a lot of hours, and I think the numbers, a lot of people say 300 hours per test. I probably did a little bit more, but you're learning everything from derivatives to accounting, obviously equity analysis and fixed income trading and research. And so you learn a lot. And I've thankfully, as I said in the intro, been able to use a lot of that learning in my career so far, and I'm excited to apply all of that to Falcon as well.
Yeah, that's awesome. And you alluded to that. So you're also married with 3 kids, right?
3 kids, yeah,
Wow.
yeah.
Busy
As somebody
guy.
said, we drink from the fire hose. Yeah.
So you've joined our team, and you're in our research and trading group, which we're very excited about. So you joined Matthew and Abby in that group. And then you're also going to be working towards starting to meet with clients directly on your own. So we're excited to have that, because right now we have a very much planning based group. And so for you to bring that investment side of things to kind of merge as another advisor on our team, we're really excited about. Corey and I are obviously very versed in retirement planning. And then our other advisor, James, is a certified financial planner, again, more planning based. And we actually hired just another advisor, Scott, who's also a certified financial planner. So adding a more investment oriented advisor to our group, we're really excited about having you. So thank you again for joining me on the show, and thanks for joining our team. So we're excited.
Yeah, me too.
And so all our Kansas City people, don't hold that St. Louis against him. He's here. He wants to be here.
You had to bring it up. Yeah, I'm in Kansas City. Our roots are firmly planted. My kids are Royals fans.
All right.
So we're good.
Good. All right. So let's dive into it. So, as of the recording of this episode, the S&P 500 is up over 10% here just past the first quarter of 2021. Can you give our listeners or viewers a little bit of insight as to why we're having such a great run when we're still very much in a pandemic?
Yeah. So it is contradictory to what most people would think, especially, coming off of last year too, where the market was up. Corporate earnings were down last year. And so there's been a lot of, I think, pull forward of this recovery that we now see occurring. Economic data is getting better. We're on the eve, or we've just started Q1 earnings season. So hearing about how companies did during the first quarter. And so the data is starting to get better at the company level and at the economic level. And what we've seen through the beginning of this year is just a continuation of the market bidding up businesses that should be back to normal, or may already be doing better than they were pre-COVID. And it is interesting when you look at the dynamics. This market right now, except for maybe the last couple of weeks, is not being led by technology, which is something that we haven't seen for quite some time. It's actually been the cyclical companies, the companies that are tied to the economy, which is, again, telling that this economic recovery is underway, and the market is ahead of that.
Right. And I've always told clients that it's not necessarily about good or bad, it's about less good or less bad, right? So the fact that even though we're in a pandemic, like you said, that we're approaching recovery, that's what's happening. So companies are perking back up, and hopefully earnings, and maybe I'm kind of stealing the thunder here a little bit, but the earnings is what we're going to be paying attention to, are going to beat on the upside, right? So so it makes sense. So we're up, we're kind of riding the wind from last year, and now we're starting to reopen, and that's why the market's up. So maybe more importantly, for our clients and our listeners, what are we paying most attention to over the next 3, 6, 12 months in the market, and so that we're making sure we have good stocks and bonds in the portfolio? So what are some of the things that you're looking at for the next quarter, look ahead?
Okay. Well, I will say, and I love the approach of looking ahead as opposed to spending too much time reflecting. And I think a famous investor once said, I don't have his name, that if you invest in the present, you'll get run over, and you need to be looking ahead because the market's discounting what's coming, right?
Right.
And so if you break it down maybe into the next 3 months, we talked about earnings. This will be the first quarter where we are starting to compare what happened at the start of COVID last year. So the first quarter of 2021 is going to be compared to what companies did in the first quarter of 2020. As everyone knows, we just started the battle with COVID at that point. So numbers were not bad or as bad at that point. So the expectations for this quarter are good in terms of the growth, but we expect over the next couple quarters that those numbers are going to accelerate. for a lot of businesses. So we've had a couple of banks report so far. They normally start earnings season. Those numbers have been really good. Returns have been muted. And then again, that's kind of the pull forward we've seen. So even with good expectations, we may not see a big pop in the markets, which is probably expected. And then as we move through earnings season, we'll get technology stocks, which obviously had done quite well last year. The things we're probably looking forward to, or we'll be looking at most closely, would be the economically sensitive businesses, and those businesses that both have cost pressures or may have cost pressures,
Right.
which would impede their earnings growth and impede the recovery of those businesses. And we want to hear what they're saying about labor problems. I know everyone's probably familiar with labor shortages right now, as people are not necessarily going back to work or are waiting for a different opportunity. So these companies that can't hire or can't find people to hire may see productivity issues. And if they have to pay people more to come back to work, that would be something we'd want to see, because that could, again, mute the energy and the excitement we've seen year to date about these businesses reporting earnings post-COVID.
Yeah, that's a really good point. I also want to hear, so we've got a new president and we're just starting to roll out or hear about what they want to roll out in form of this new infrastructure bill.
Yeah.
But before I want to get your takes on Biden and his administration, I want a quick shout out to, we'll put the subscribe button up here. So if you're watching or listening to this, the best way not to miss an episode of Upticks is to be sure that you're subscribed. So feel free, go ahead and mash that subscribe button after the show, or hit us a thumbs up if you do like our content. Again, I think that's the best way for more people to get access to our show. So thank you again for tuning in. So tell me, Brandon, what about Biden? I mean, a lot of our clients, you know, it's pretty interesting to me. About half of my clients are Republican and half of them are Democrats. So I get a really good viewpoint on both sides of it. So we're here. The Democrats have complete control. Some clients are celebrating that, and some clients are nervous about that. What is your take on what you've been seeing coming out of Washington?
So I'm looking at what's going on right now with Washington, with policy, and I'm focused on, as a lot of people are starting to talk about and focus on more, is inflation. And what we've seen, so during the first quarter, we passed another stimulus bill, larger, or it was kind of in addition to the one that was passed at the end of last year. And then we have the one from the beginning of COVID. We are talking about an infrastructure bill. The Fed, too, has also been extremely accommodative. So there's a lot of liquidity. There's a lot of support monetarily to get this economic recovery off the ground and running. And so when you combine those two things, you combine the liquidity and the stimulus and the infrastructure potentially with the recovery, and you're gonna see what we think is going to be growth and also inflation. And when those dollars enter the system, we just saw, I think it was yesterday, a retail sales number that was phenomenal. I believe over 9%. And then when you combine all of that economic growth because of the stimulus, we're going to be in a position where rates, as we saw during the first quarter, they moved significantly higher. Inflation will start to tick up. I think CPI is at about 2.6%. Core CPI is at about 1.6%, which is higher than it was obviously last year when prices were depressed. But if the stimulus continues to enter the economy and we get more stimulus, whether it's infrastructure or another stimulus bill, that's just going to build. And what we'll see is eventually inflation moving higher than normal, which is about 2%, as the Fed would say. And if that happens, then we're going to be looking at an economic recovery and an equity market that has the potential for weakness, whether that's growth stocks that don't want inflation or higher interest rates, and the value stocks or the commodity stocks. Energy, gold, obviously is a great comparison to a higher inflation market. Those dynamics will start to come to the forefront, and our clients and anybody watching should expect to see talk of a continued rotation between those two styles, emphasis on commodities, and I think that's really important. And that's not going to be maybe the next 3 months. We'll start to see the data come through. But over the next 6 to 12 months, that will be a story that will either fizzle out, as we'll talk about, whether it's temporary or if it's more secular and long-term in nature. That's when we start to get concerned. The last time we had real inflation was the 70s. like
Right.
real inflation. And, people remember that, I'm sure. I'm not saying we're going there, and I don't think anybody is right now, but it is something to watch.
Right, right. Good point. And that's exactly what we do at Falcon Wealth Advisors. So we watch that, and if we feel like it's not fizzling, but it's actually bubbling up, we will shift the portfolio to take advantage of that. And the beauty is, like you mentioned, gold and generally speaking, stocks are typically inflationary by their nature. So the good news is, for our clients, we want to make sure that you're protected and that you participate in some of that asset appreciation to help protect your purchasing power if and when inflation gets out of hand. Now, I think the Fed has been really good at juggling that. I'd have to go back, and maybe you don't or do know this, but I wonder what the Fed did in the 70s, because that's when people remember mortgages were really high, CDs paid a lot of money. What was the Fed doing? Were they raising rates and it just got out of control and they couldn't keep up? Do you know that? And if you don't, it's okay.
Probably not in the 70s. I know in the 60s they did try to fight it with an increase in interest rates. That was not met with any bit of, they weren't met with open hands and open arms by the equity markets. So whenever the Fed goes into their tightening, which is what theoretically would happen in a higher inflation market, as you're talking about, we know that higher interest rates back in 2018, wasn't that long ago that Powell at the time laid out his interest rate policy or his path in the fourth quarter of 18. And if everyone remembers that was a bloodbath for equities. And again, I'm not predicting that, but that is the type of environment that we're monitoring in terms of the data coming in and seeing if it's sustainable. Because if the Fed acts to curb runaway inflation, not just maybe 2% or normal inflation, that does pose a threat for a lot of equities and also fixed income and everything else. So again, the reason why, one of the big reasons why I'm happy to be a part of Falcon is that we are doing the boots on the ground work on the portfolios, both the bonds and the equities, identifying names that we think are attractive both now and into the future. And that lets us be more flexible and opportunistic when things happen. Again, not just in the short term, but really thinking about the longer term implications of what's going on.
Perfect. Thank you. I agree with you. It was a bad year in 2018, but bloodbath is a bold term, because I think of 2008 as being really bad. But we definitely saw a pullback and things were, and you're right, it was tough and tight in there. So thank you again, Brandon. I know that's all the time that we have this morning. You got to get back to trading and researching things. But for our listenership, so again, Brandon, we're excited to have you on the team. He's also going to be sending out to all of our clients quarterly commentary in written form. And so all of our clients can expect to receive an email every quarter with all of the stocks that you own, ticker symbols, also what's happened in the market, the look ahead, everything that we kind of just talked about, but in a little bit more detail. So we're excited to be sharing that with all of the clients here soon. And like I said, Brandon's on our team. Brandon, maybe if you want to share your contact information, if anyone wants to email you directly with questions, we're happy to do that as well.
Yeah, perfect. Whatever you guys need, it's Brandon, BRANDON, at falconwealthadvisors.com. You can also find me on LinkedIn, Brandon Reed, and I'm under the Falcon Wealth masthead.
Awesome. Yeah, thank you. And again, I'm out there on various social media platforms, Instagram, Twitter, LinkedIn, and Facebook. So if you want to send me a friend request, happy to connect and expand our network. Also, Falcon Wealth Advisors, our company, are on the same 4 platforms. So if you want to connect with us, again, Twitter, LinkedIn, Facebook, and Instagram. Like I said, it's all the time I have for you today. Brandon, we're recording this on a Friday. Do you get any big plans you want to share with everybody on the weekend, with you and your wife and the kids?
Yeah, hoping the weather's good. With COVID, everyone went stir crazy. So we've just been trying to get out and do whatever we can. My son is starting baseball, or it'll be a second baseball practice, and my daughter has dance. So awesome. Hoping to just get back to normal.
Right. Well, good. Thank you again for being on the show, and hope all of you out there have a great week.
Thank you.
Thanks.